Bill here with another edition of Metals Minute. Today is Wednesday, September 15th. Well, listen, there's a lot of things going on, getting ready to break this week. It's not a good thing, but it's something that I believe is going to impact us here in the United States. It's something going on in China with a company called Evergrande. It's a real estate development company. There are millions of dollars of people's savings that are lost, basically. Bankruptcy announcements are pending in the next day or two that are going to affect millions of people and possibly roil the markets. They've had a lot of overcapacity problem in China with a lot of the buildings that they've built. Now they're actually destroying some of the buildings that they've recently been putting up because of overcapacity. And there are a lot of people that made investments in that sector that are now being negatively impacted. We don't know all the connections yet to the United States market, but invariably there are some, and we'll be finding that out in the days and weeks ahead, how that's going to impact us exactly. But here in the United States, we've had record tax collection, record income taxes collected. Which is great, except we've also had record spending, which is almost double what the tax collections were. So we also have record deficits, which means our debt has gone up further. And therefore, that affects interest rates in the United States. And we've got a link to an article this week that we discuss how that impacts us as Americans, how that impacts us as savers. There are some countries in the world where your savings account earns 6% interest. But here in the United States, the average today is 0.06%. So what does that mean? That means we have to become a precious metal investor. There's just really no two ways about it. If you want to protect yourself, protect your savings from the ravages of inflation. And listen, while they're saying that inflation is transitory, that's not the case in the real world. It was reported today, and I'll put up a graph for you to see, but food prices globally are at their highest levels that we've seen in nearly 60 years. And so that impacts everyone. There's some spending items that are discretionary that people can choose to participate in or not. You know, not everyone owns a yacht or a boat. Not everyone may choose to go to the movie theater 3 times a month. But food is one of those items that everybody needs. And so this is something that affects everyone that doesn't necessarily show up in the inflation numbers here in the United States, but it nevertheless affects us all. So this affects the prices we pay for everything. And so we're going to see tax rates increase, even though the taxes collected have been at record levels. The move right now is to increase tax rates. In other words, the rate that people pay. And I make this prediction here today that as rates are increased, revenues, I believe, may actually come down. It's odd the way that works. And so we've got to protect ourselves from taxes, from inflation, from something called stagflation. And that's where growth is kind of floundering and while expenses are rising. And in that environment, gold and silver have done exceptionally well in times past. And so we encourage our readers and our those watching the broadcast, we implore you to try to protect yourself if you can by owning precious metals. Thanks a lot. We'll see you next week.